All right, good peoples. It is Bruce with Targeted Wealth Creation. I'm doing Coney and Pulte update only. I'm focusing on Coney. I'll come back at you guys. It's only 9 Eastern. By tomorrow morning, you'll see my Pulte update. And then I'm very, very close to doing Misty, SMCY, GDXY, probably CVNY, a few others you guys threw out there. I'm just building automation tools, so I've been spending a lot of time on that. But since Coney has such good news, and then also before the market opens a couple hours, we're going to get the announcement, right? So as I said to you guys in my estimate, I did not think Coney was going to pay that big. I really wanted a dollar. I really wish they would. And several of you guys, Real Estate Doug from Houston, and somebody else joined in and said, nah, I don't want the NAV, blah. And I get it. And I said, I totally disagree. I'll tell you why I totally disagree. Because of chart technicals. And guess what happened? We're just blowing up in Coney. And the spreads, well, I'll get into that when I show you all the data. Let's go here. What did Coin and Coney do, good peoples? Well, we went up a whopping 12.10. And it's all predicated on this inverse head and shoulders cup and handle, just two different names for the same formation. Um, and I didn't know if we were going to go back and retest the breakout line, which we could have. We didn't end up doing that. Instead, we took off, which is kind of like a breakaway gap. And we'll get into that in a minute. So with a 12.10% increase and with Yieldmax utilizing spreads, what did I say? We used to be around 35% with this kind of move on pure selling naked calls, or they call them covered calls because they had a synthetic. Okay. So remember, our synthetic is good for 100% up move. Whatever coin does, we make on the synthetic. So we buy a call and sell a put, both bullish action. So when you see the big money in the synthetic, that's great. However, we lose over in the weeklies when we blow up like this. The idea is that the spread's going to help. Why? Because there's a little bit of insurance, but they're using a 15-point gap, okay, because we have super high IV because coin is blowing up, with 12% increases in a single day. So we're out 3 or 4% out of the money on our sold calls. So we just get our lunch handed to us. So I'm going to get into all the details. But the good news still with the synthetic is we're getting about 50 to 55% of the profits. So it's better than not getting any profits. But I really wish they would go to the swaps, okay, and get leverage. Because if you're leveraged here, then your synthetic doesn't just go up the same. It goes up 120, 125, 150%. You use it when you feel like, or what they could have done here is only sold half the calls and left open the other half so we could run. And then you don't get killed. So the spread doesn't help you that much. I mean, it can, but when I show you the net, you'll see what I mean. All right, guys. So we're in I didn't update this for, what is it, 7? I can go out and look at the schedule in just a second. It's probably like 7:22. If I had to guess, I can just go look on my other monitor for a calendar and know right away. Okay, so 6:20 was our old cutoff. So it's going to be 7:18. So let's get that together, good peoples. And you are good peoples, all of you. Okay, so we got 23 days to go. But when I show you what all we're doing, guys, we're doing good. So Doug, and a few others that were worried, no, don't pay a dollar. Well, they probably aren't going to pay the dollar because they're selfish, okay? But we earned it. But now we got 87 cents in the door, guys. We closed the synthetic 300. We rolled it because where are we? We're at frickin' 344, almost 345. So they bought into a 330. That was the position. So let's talk about that. So they closed this. Remember, we had closed down here the 250 a while ago. So they closed this. What did it get us? 207, or really about 187 when you net. Remember when you first buy into those, you're you're buying the call, which is a little bit, typically is a little bit greater than what you sell the put for. But I'm talking small stuff. So we really have closer to 190, but I just used the real values. This is what they sold the call for, and this is what they bought back the put. And these were out at 815, and they just established a new 815 pair that's more appropriate for where they are. So a 330. So what did this do? This is a closed asset, guys. And look at, we're up 66 million on the current. But again, that's paper money. And all of this has nothing to do with the payment, right? This is all in the brand new cycle. Payment calculations ended on 620. So now we run all the way to 718, which is a Friday. So all the money that we collect in the weeklies and the synthetics through 718 determines the pool of money that they can play with to pay us. Okay? Got it? Got it. All right. I love that you guys can understand with me. So let's go a little bit further. So weekly's closed. Okay. 71 million we lost, right? When you start selling something for $5 and buying it back for 25, you know you got overrun. Yeah, the spreads helped a little. I'm not going to show you every single little nuance in that. Just sum it up and tell you. So I gave, 207 weekly's close. So right now I just use these two numbers and it's 87. But guess what? If you really want to look at this isn't going to change. Well, it may if I put it over here. No, I just subtracted these two and gave you, this is my payment estimate. That's what we have in the door, 87. Now, we're setting on a paper gain of 43 here. And you know what? The weeklies are interested. Let me take you through that. And that's about it. Now I can finish the video. All right, guys. Um, so what do we have in play? And you can see the expense on these guys, right? Of where they are. So we have 14,983 42s. Well, guys, they're already in the money. So, but they're showing a value of $10.75 with 3 trading days to go. So what should they really be worth based on the current price? What is just non-premium? Okay, no theta, no time decay in there. Just what's the difference between the current price 344.80 and 342.5? Well, it's like 230. Okay, so this thing is going to shrink as long as we don't run up further, right? If we close at 360, then we're going to have our lunch handed to us. So I don't know. I think they go too far on the spreads, and also, quite honestly, let me see the counts. This is interesting. I'm going to see. I'm going to sum up the top and then subtract the bottom to see if the call counts. So I've got, all right, so that doesn't make sense. D27, through D31. Let's just see what that number is. Better to do it that way. So there's 43,050, which is what I have over here. Let's see how many are at the bottom are written. So it's probably okay. So hey, we're 13,000 in the good. So they are doing some of what I talked about, right? They're not putting insurance. They're not buying the high-priced ones, okay, that are part of the spread. They're only using 30,000 of the 43, so they're uncovered. Well, this one technically is kind of the uncovered one because we don't even start making any money here till a minimum of 357.5, which they've got a 15 spread on pretty much all of these guys, which I think is too much. But what they're trying to do is save the premium for what they buy these on. But I want you to see something. Look at this. I'd probably just take this guy off the table, to be honest. Look at this. So on the 357, when they bought it, they only paid, right? 14,980. They bought it in chunks, 4,200, 5,000, and 5780. They paid 252, 258, and 227. So around 235 on average times this amount. Well, they only spent $3,660 to buy that. What's it worth? 16,000. Okay. Guess what? If they stay somewhere below 357, they stay right around 345, 348. That thing's going to be worth 10,000 tomorrow at the close. So I think when you got that kind of gain, now, this is sitting out there. But we collected. This is saying, hey, this thing's worth 16,000, but we sold all that stuff for like $5, which gives us all the way up to around 347. We're only at 344 to break even. So sorry guys, I'm throwing a lot of numbers at you, but I'm trying to teach you a little bit about how these things play. So we have a loss on these guys up here on paper of 10,000 on the top. Well, on the bottom, we have a gain of 9,680 or 9,680,000. But guys, this will evaporate just like this one will. This will start evaporating and this will start evaporating. But look at the spread. We don't come Friday, if this is 357, we get further killed. This becomes about 13. This becomes 0 because we didn't run by 357. So if it was me, I would have sold this thing, been unexposed for a day or so, and then I would have went out and bought like a 365 or a 360 for really cheap. So I don't know. Spreads are tough. But you can mess around with each leg. That's the beauty. Whereas the synthetics, you have to stay fully committed. You have to stay the exact quantity. That's how they choose, because that's going long. That somewhat protects you. All right, guys. So that's what I got for. What did the shares do? Well, when we went like this, people were seeing, oh my gosh, Cony's going up, coins going way up. They don't necessarily understand all the inner workings. Um, Not that you have to know it all, but it's suffice to say you don't go one for one. There's just no way. That's why I always say, spreads, even with spreads, you're maybe 55% capture. And this is a perfect day. If this is a 2% move, you know, Cony can capture 100% of it. But when you have these outsized moved in a single day where you have to go and buy all of your calls back that you lost your rear end on, you have to buy new ones. And so you penny pinch, you go way out there, so you only pay like $2, right? Everything's around $2. But what good is that when they never get there? And those $2 all add up in time. I probably also would have only had about a half. I probably would have had like 21.5 here. Just me, just saying. Because I look at it like when you've run, let's go look at the chart. Okay, guys. So I put a new chart out here. All right, and I had told you guys before, these are older days, right? 514 on Coney. It's just going to do what coin does to a lesser degree. So here's this inverse head and shoulders, or what's also known as sort of a cup and a handle, but it's more of an inverse head and shoulders. So you measure from the bottom to the line, it's better to have a straight line, and then you take that distance and you put it on top and say that's usually a minimum move. Well, that was measuring, okay, under 150 to 220. So it was measuring about $70. So I was saying 300 as a minimum move. Well, look at where we are, guys. We're close to 350. So, and I also said it's possible we fill this gap, and it's called come back and test the breakout, return to the scene of crime, as Gareth Soloway, one of my mentors in technical analysis, says. Um, but there's no guarantee. Any pattern can fail. You just have probabilities, right? So I always said, that's my comment to Doug and you guys. Look, have a little faith. Coney, based on coin, is positioned to run. So when you say don't pay us a dollar, we can't recover the NAV, you guys don't get the technical analysis on what can happen, and it just happened. It's been happening. So that's what I got to say, peoples. It doesn't always work, right? It's a probability. It's 75% probability on that pattern is going to play out. But it's never 100%. If it was 100%, you could become super wealthy and never really have risk. So there's always risk out there. All right, guys, stay positive. We got 87 cents in the kitty. Now, this 43, we could turn around and lose again. But even this week on our weeklies, we won't lose like this. There's just no way. It's not, coin is not going to go up another $50. It may go up 15 or 20. And then we might lose 15 or 18 cents but don't worry, this being positive. So just based on this early, and look, we got 23 days to go till July 18th. So all we got to do is hang on and prosper. And I like what I see from coin. It's about time. I've been buying Coney a lot. So somebody also asked me, why are you doing Pulte and why are you doing Coney? Because Coney is super undervalued and there's just no better software company in the world than Palantir. So those are two things. I still love Misty. I'm adding that. Snowy's a little junior Palantir. Um, what else? You guys, I've said Hoy and Carvani, they're running, but I don't trust them. I wouldn't hold them for multiple years. If you want to get big paydays and let it run, but it could be over in 30 days. I don't know. So again, I like to tell you what I think about things, right? And that's based on, 45 years of watching these markets, some trading, a lot of investing, and I've said to you, commodities are the place. So, gold and silver is not doing anything right now. It's treading water. But that will change. If you don't own some miners, guys, go out there and get a base of miners. And if you just want to play an income fund and know that it's going to be bullish over multiple years, buy some GDXY. It's not going to pay what Coney pays. It's not going to pay right now what Hui or Carvani, but it'll outperform those stocks over the next 3 or 4 years. That is a given. Okay, guys, that's what I got for you today. Hope you enjoyed it again. This is Bruce with Targeted Wealth Creation. This is not financial advice. See ya.